You are listening to Mining Stock Education.
If you take a look at valuations, gold stocks are still still undervalued in relation to the gold price. I mean, if you take a look at where the gold stocks were valued at in the last run up into 2011, they were trading at like 10 to 15 times cash flow. That's the miners. And now they're trading at half that, at like 7 times cash flow still.
Thanks for tuning in to Mining Stock Education. I'm your host, Bill Powers, and today you're going to hear from Dr. David Erfle from Junior Miner Junky with a Y, our monthly check-in. David, I bestowed upon you the doctorate of junior mining speculating. So, what's your thoughts on gold and silver? We always start there. Last 30 days, we're looking at about $50 silver. It's been up to, I think, $54, $55 an ounce. Gold is $4,070 as we chat now. Where are you seeing this move?
Yeah, I mean, it's been pretty incredible. We've had an incredible run up into mid-October. I mean, the last time we had a nice run in the gold price when it moved about $1,000 in about 5 months, when it broke out of that 13-year cup and handle pattern and went from like 2,500 to 3,500 in about 4 or 5 months. Once it hit 3,500, it was time to correct, and that's what it did. It took about 4 weeks for the price depreciation to happen. It corrected about 11%, and then it consolidated for about 4 or 5 months. And then after that consolidation was over, it went up another $1,000. It went from around 3,300 to 4,400. But this time it only did it in 10 weeks. And then recently we've had that 11% correction, but this time the 11% correction only happened in 6 trading days. And then we had another bounce. So the gold price, it appears to me, is trying to make a new floor at 4,000. And the silver price, more importantly, I mean, it bounced and it retested its all-time high around 54.50. The silver price is trying to bottom at 50, which was once 45-year major resistance. So that's where we are as far as the metals are concerned. I mean, this consolidation is healthy and it's necessary for the health of the bull market going forward.
Where are you seeing value? Considering gold's run, are stocks undervalued relative to the underlying metal? Where do you see value?
Absolutely. You know, the miners, you know, they've had a huge run. We had the GDX and GDXJ go up around 130%. Into that mid-October peak. But if you take a look at valuations, gold stocks are still undervalued in relation to the gold price. I mean, if you take a look at where the gold stocks were valued at in the last run up into 2011, they were trading at like 10 to 15 times cash flow. That's the miners. And now they're trading at half that, at like 7 times cash flow still. And I think a big reason for that is your generalist investor still hasn't fully embraced this gold bull market because they're still distracted by the stock market that continues to make all-time highs, especially AI stocks. So that's good for us. I mean, if you're doing the right thing and riding the bull and trimming profits along the way, then you're doing really well and waiting for the generalist investor to come in and bid these stocks up even higher. But as far as the juniors are concerned, they're even more undervalued than the mining stocks. I mean, a lot of these juniors that are de-risking these super high margin projects now are trading at 75% less than their net asset value of their projects. And the earlier stage ones, the companies that I've been more attracted to recently, that I've taken I've recommended trimming profits on some of our huge gains that we've had in a lot of these late stage juniors and putting them into earlier stage juniors. Well, the projects they're de-risking, you know, if they put out a PEA, they're at the PEA stage, they're still trading at 85% less than the net asset value. So, there's still a lot of room to go as far as the juniors are concerned, especially. And it's interesting if you take a look at the TSX venture. Right, that's where the venture is made up of over 50% junior mining stocks. And it's made this huge base, this huge 10-year base, and it ran up to the neckline of that base, of that inverse head and shoulder base at around 1,000, and it's corrected 16%. The silver price is corrected 16%, but if you take a look at the miners, the GDX is corrected over 20%, and the GDXJ corrected around 23%. So this shows you that the juniors, which are higher risk, have corrected less. So they're leading, which is good. And most recently, we've had the silver price and the GDX and GDXJ showing relative strength to the gold price. When we had, especially on Friday, we had that huge downdraft in the gold price, and the mining sector came down, and it was immediately bought and bounced strongly into the close, while silver and especially gold remained weak into the weekend. So I think there's a lot of money on the sidelines still waiting to get in to these gold stocks because they see the value also.
You referenced the overall stock market that's a competitor to the gold stocks in terms of the dollars, the inflow of dollars. Mm-hmm. Do you see that as being a bigger catalyst than even easy money policy at the Fed if Donald Trump gets his way in 2026 with the chairman and the policies that they issue? You see the rolling over of the general stock market. Is that a bigger catalyst for retail inflow into gold stocks?
Yeah, I think it is. Unless you see a panic move down, then gold stocks, are stocks. And when there's margin calls, they're sold along with all the other stocks. So I don't expect a panic move, but if you do see a panic move, that's what generally happens. But it's always the gold stocks that recover first because those are the safe havens that investors want to go into. But I digress. As far as your question is concerned, yes, I mean the stock market, which is overvalued on so many levels, it's had this huge run. The CAPE ratio, the Warren Buffett index, whatever index you want to look at, it's so overvalued, and the gold stocks are still really undervalued. So, absolutely, I expect to see rotation, especially when the AI stocks really start to roll over. But what's interesting is Bitcoin now has really sank, and it lost that $100,000 level, and now it's moving down to the 90,000 level. That's where the next big support is, and the Bitcoin price was generally tied to the AI stocks. But you've seen the Bitcoin, move down a lot sharper than AI stocks recently. So it might be a telling sign that AI stocks might be due for a bigger correction. And according to several people, and it's especially when you look at valuations, I think it's ready to start. People are already start taking some profits.
You would not see Bitcoin as a way to preserve wealth. Therefore, you wouldn't link Bitcoin to gold the way some do.
No, absolutely not. I mean, especially if you take a look at what the gold price has done this year and what the Bitcoin price has done this year, as gold has proven to be the ultimate safe haven. I mean, these central banks own more gold than they do treasuries now. I mean, there's signs all over the place that gold is now the ultimate safe haven.
So let's talk Mexico. You're invested in some juniors in Mexico. Interesting news. On the positive note, Silver Tiger is going to be able to move forward with project construction there, getting all their necessary permissions. But then what was also kind of interesting is Fresnillo, a precious metals producer in Mexico, went north of the border of me here in Michigan, went up into Quebec, and they're going to be buying Probe Mining unless there's another offer that comes to the table. What are your thoughts on what's going on in Mexico, David? Why is Fresnillo leaving, even as Silver Tiger gets their permit?
Yeah, it's interesting. That deal came out of left field, especially for myself and my subscribers. As you know, we've been in Probe for quite some time now, since 2020. And we're not complaining about, an actual takeover, because we have a 4-bagger if the deal goes through. But as far as why we got into the stock, we expected, a much better offer for this company. I mean, it's not really a shock that a takeover was announced here, and it has happened because Probe Management, they're not mine builders, and I know that their ultimate goal was to sell the company. But for $58 an ounce in the ground, I mean, that's almost criminally too low as far as my subscribers and I are concerned. I mean, just if you take a look at the Kinross Great Bear takeover, which was 1.4 billion, that's almost 3 times what Fresnillo's getting Novador for. Novador has 10 million ounces, and when Kinross made the offer for Great Bear, they didn't even have a resource, and the property was much smaller.
Didn't Kinross look at the data and kind of construct their own estimated
by the time they eventually published a resource, which I think was a little over a year later, they'd end up paying almost $300 an ounce in the ground for a little over 5 million ounces. Novador's got 10 million ounces, and not only does it have a mineral resource, but they published a PEA, and they're very close to publishing a PFS. So this is a very robust project. And Fresnillo, like you said, I mean, this is basically an alien company coming into a territory that's pretty much run by Agnico, right? I mean, Agnico is the dominant operator in the area, and their Malartic mine is like 20 minutes away, and it's going to run out of mill feed in 2028. And guess when Novador is expected to be fully permitted? 2028. So, trucking ore from Novador to Malartic would be the no-brainer. And I know they're already looking at options at other areas of toll milling. So it makes much more sense for Agnico to be to take over this stock. I mean, the chairman of Agnico, I mean of Probe, is on the Agnico, is the head of the Agnico board. So they obviously knew about this process. It was a 6 month process that Fresnillo went through to buy it, I believe. And I wouldn't be surprised if Agnico makes an offer. Maybe they're holding back and say, let's see what Fresnillo offers, and then we can counter, because it makes much more sense for a company like Agnico to buy it, because, like I said, they're the dominant operator in the area, and they've got that Malartic mine so close. But also Kinross, and plus Agnico's got like $2.2 billion on the books. They've been making so much money recently. I mean, their all-in sustaining costs are like $1,250, so their margins are incredible. So they've got all this cash. And Agnico's got a lot of cash. Kinross has got a lot of cash. I think they've got 1.7 billion on their books. Of course, my subscribers and I are hoping for a bidding war, which would make sense, because if it goes for $58 an ounce, it's not only going to be a fantastic deal for Fresnillo, but it'll also show the market that, hey, maybe these ounces aren't worth as much as we thought they were.
So based on some of those facts that you just laid out there, why do you think Agnico Eagle hadn't moved on Probe earlier? Especially, we're assuming that they knew what was going on because of the connection at the board level that you referenced. Mm-hmm. Do you think it's like, we're not going to outbid, we're not going to bid against ourselves, so we know this is in the works. Like you said, let's see where it comes in, and then let's take it. But even when you're talking about $100 million at that point, Dave, when you need to keep that mill going, like, why would you play chicken potentially with something like that?
Yeah, exactly. Yeah. I mean, they didn't even take a strategic position. Eldorado did, but Eldorado's got their hands full in grease, so they don't want to take on that project right now. So they've agreed to the deal. I think between them and management, that's 12% of the stock, and they've agreed to this deal. But if Agnico, remember that they also took out 03. Subscribers and I had a position in that, and we made money, but we didn't make nearly as much as we thought we would, because we expected, a higher takeover further down the road. I think they ended up taking over 03 for around $100 an ounce in the ground. And that was last year. So, Fresnillo's getting this awfully cheap, but the break fee, in case there is another offer, the break fee is only 31 million. So I imagine that, Probe probably negotiated the break fee down because they probably feel that it's undervalued too, but they have to go to shareholders with the offer, and they've accepted it, but they've got that low break fee. I mean, $31 million break fee is nothing. I mean, it's like 15 cents a share. And also they've got 45 million cash. So that pretty much covers the break fee. So, there's nothing stopping another company, especially a company like Agnico or possibly Kinross, to come in and make another offer.
Has there been any recent mergers and acquisitions that caused you to say, yes, this is a bull market, this looks like a bull market takeover? Because you're not impressed with this one, obviously, even as a probe shareholder.
Well, yeah, I mean the Mag Silver takeover and the Silvercrest takeover, those were those were silver projects. Or the silver projects are so rare, so we had that run where a lot of silver projects were being taken over. That was clear signs of a bull market. But we need to see something like a bidding war happen for a takeover like this, because like I said, since it's so cheap. I mean, the average cost per ground, in-ground cost per ounce right now for PEA stage and MRE stage juniors is trading for around $60 an ounce, and that's about what they're getting it for. But like I said, it's in such a fantastic jurisdiction, and they've already proved up 10 million ounces, and there's a lot more there. They've showed proof of concept that there is. It's a hub and spoke project, and you've got Nobador, and you've got some other deposits around it that make up the 10 million. So there's a lot of gold there. So getting it for $58 an ounce in this market with gold, trying to make a floor at $4,000 an ounce, it just tells me that, hey, I think we're about to get a bidding war in this stock, in this company.
And you've owned other companies, namely Osino Resources, where the bid came in from Dundee Precious, and then you sold, and then a Chinese company came in with even a higher bid. So you're holding on to see if there's another bid here?
Exactly. Yeah. I mean, but this time it's not going to be a Chinese bid because it's Canada. So like I said, it's going to be, it makes so much sense to me that it would be Kinross or Agnico, and most likely Agnico.
Canada, like the U.S., is getting behind some of their critical metals projects. What are your thoughts on the Canadian government stepping in more actively, especially with the critical metals projects in Canada?
Yeah, it's fantastic. It was started by the Trump administration, where they started to be more friendly towards mineral projects. Especially critical mineral projects. There's all this scuttlebutt of shortening the timelines to build these things. And it started in the U.S. and it's now crossed over into Canada, and Carney's on board with it. It's really nice to see it, because the previous administration, Trudeau, was not. So, it's really nice to see. And, it's just another sign that we're in a strong bull market.
Dave, when you're looking at a single producer and they're bringing their first mine online, but they're subcontracting the mining, it's not their own employees, they have a subcontractor, so their mining costs are higher, but hopefully they're hiring a professional group. What are the pros and cons in that from your perspective? Like, do you at first blush, do you say no thank you, or you look deeper into it? What are your thoughts on contract mining for your first mine build?
Well, it all depends on the management team. Had they done that before in the past, and did it work out for them? You take a look at that, and you take a look at what basically the market reaction to it. Also, I haven't had any problems with it per se. As far as it happening into companies that I'm invested in, where I look at it and say, oh, that's going to be a contract build, so I'm going to sell it. I don't like it. That's never happened.
JMJ sentiment indicator, Junior Miner Junky sentiment indicator. Where are we at after, the drop down on gold from 4,400 to 4,000?
Yeah, it's ticking up a little.
Okay.
Yeah. I mean, especially last month, I had I had the most new subscribers last month that I think that I'd ever had. So,
and what do you attribute that to?
I attribute that to the gold price going up $1,000 in 10 weeks and basically the mining stocks doing so well. I mean, our portfolio is doing fantastic. I mean, the JMJ portfolio is up over 180% now on the year. And that's clearly destroying the GDX and the GDXJ. And, I've got a lot of happy subscribers, and the word's getting out that we're doing really well. We're in the right companies, and we're good. We're good stock pickers. And since I've been in this sector for over 20 years, my risk management technique is proving to be very successful in this move. So that's what's great about, when I do get a cancellation, the person that's canceling says, thank you so much. I've learned a lot. I know how to run my own portfolio now, so I don't need you anymore. I love to get emails like that. That's what I'm here for, to teach people how to do this themselves.
To learn more about what Dave offers, go to juniorminerjunky.com. Dave, as always, I appreciate chatting with you on the show every 30 days, so thank you.
Absolutely. Thanks again for having me on.